You build your account steadily. You hit a specific profit number, and suddenly your discipline breaks. You force bad trades, and the profits disappear. This recurring cycle represents your equity ceiling. When your equity curve hits this horizontal threshold, it triggers an internal response that overrides your logical pattern recognition. Breaking the ceiling requires moving beyond general trading advice. We have to implement a rigid framework designed to regulate your nervous system through mathematics and biology. Gather your trading journal, your account equity curve, and a calculator. We are building your personalized breakthrough plan. Progress here comes from systematically reprogramming how your body physically reacts to financial risk, rather than finding a new market indicator. Look closely at your recent trading history. Find the exact dollar amount in your account where your execution shifts from calm and methodical to anxious or euphoric. This dollar amount is your financial thermostat, the specific trigger point where your brain enters a fight or flight survival mode. We will bypass this response using the ego drop sizing protocol. This mockup shows a standard position size being mathematically slashed by 50%, reducing exposure to a strict 1 to 2% risk metric. The potential loss must feel entirely boring. Keeping risk strictly between 1 and 2% creates a stealth mechanism, allowing you to execute trades without spiking adrenaline that leads to impulsive decisions. Your ego will likely resist this change. Scaling down often feels like losing progress, especially when you are focused on making money quickly. However, forcing large capital before you have mastered your own behavior guarantees an eventual collapse. Intentionally scaling back is the only way to permanently expand your financial comfort zone. Next, we must install a mandatory morning transition protocol. This severs the immediate physical link between opening your laptop and clicking the buy button. You will perform exactly 5 minutes of rhythmic breathing. Inhale for 4 seconds, hold for 2, and exhale for 6. This specific sequence is designed to lower the cortisol levels in your bloodstream. Follow this with a mechanical rule. Wait exactly 10 minutes after opening your charts before you are permitted to execute a single trade. Use this buffer window for a pulse check. If your heart rate feels elevated or your mind is racing, you are strictly prohibited from trading the current session. Entering the market with a chemically spiked, undisciplined body creates a liability that no strategy can overcome. You must neutralize your own physiology prior to execution. During this rebuilding phase, you must stop tracking your daily profit and loss entirely. Your new sole metric for success is correct execution. As shown on this checklist, you are only graded on your ability to define risk, wait 10 minutes, and stop after 2 losses. There are no columns for monetary values. The 2 losses and stop rule is an uncompromising condition. Once you reach this limit, your session is over, regardless of market conditions. Continuing to trade for the thrill or the adrenaline rush effectively transforms this profession into a gambling addiction. Shifting the brain's reward system towards disciplined structure permanently protects your capital and your psychological state. You now have the framework, a defined financial threshold, a mathematically de-risked position size, and a mandatory biological buffer. Starting tomorrow morning, your only goal is to execute exactly 1 single trade, utilizing this scaled-down, rules-based system. It is an absolute requirement that you do not look at the dollar amount of your account during this execution. Prioritizing correct execution over immediate profit is the mechanical engine that creates long-term wealth. Achieving total, unflinching control over your own behavioral and biological responses is the absolute foundation of market mastery.